Okay, good afternoon, good morning, ladies and gentlemen. Update number 4 on the sterling yen. And I just want to talk about a couple of things I think that are pretty important here. And the first thing I want to do is I want to start off with a statement. The statement is a rule. Markets are never wrong. Opinions often are. It's a very, very important rule. Okay. And I'm the first to always say, like, I have an opinion. I had a biasness towards the upward side of sterling yen, and I still do. It's still there, and there's a reason for it. And I'll give you my reasons right now. You can't just have a bias towards a certain direction in the marketplace without an underlying reason. Okay. The marketplace came up and broke through the 135.03. For me, it's a pivot point, really. Okay, that even though there's no pivot here or any type of fractal, okay, this is like one of my own devised pivot points. Okay, and by the market showing strength by coming up through this level the first time and then failing, that was fine for me. Okay, that was okay, because that's now the market's going to enter into a natural reaction mode, right? And the first thing we got to look at is, well, make sure that this pivot holds and doesn't go. Okay, which is 133.96. So it does, and I mean, it came right down to this trend reactionary number, 134.37. Came back up, went back up through 135.03. This was a couple of days ago. This was on the 13th, and we were saying at that point we needed to get through 135.53 in order to attack this high, and then possibly get up to the next TRN of 136.54. Okay, now, what has occurred? Well, obviously resistance here, beautiful resistance. Okay, what gave me the first concern was the break of this low pivot. Okay, now this low pivot broke. Now I looked over to the left here and I said, this 133.96 has to hold. Okay, and it did. The market went back up through this trend degree 134.10. And now we went back up. However, we have a lower high so far against a lower low. Now, Dow theory is, okay, what's the beginning of a downtrend is when, you have lower highs and lower lows, right? So it's not there yet, okay? But the only glimmer of hope to keep my theory alive, and believe me, I'm not in love with this, I don't really care, is that this 134.45 has been holding. It's been there last evening, last session, early in the morning. I was watching this. I was long, and this thing was just heavy. Every time it would come up to this thing, it would get hit hard, back down. It didn't fly down though. That was the first. Remember the other video I was talking about? Well, the trend line broke, but I didn't see any type of like move of magnitude. So something is underlying this right now. There's a bullish tone that's underlying it. It could change at any moment. So this is the other point that I want to make. For me, and I want you all to go back, and you should all keep trading diaries. Every day you should have a trading diary. You should be, writing what your thoughts are on the marketplace, what your opinion of direction is, and it's just an opinion. Remember, markets are never wrong. Opinions often are. If you take the standpoint of like scientific theory or being scientifically objective, is that you're writing what your hypothesis is. Market should go up. Why should the market go up? Market should go up because it broke this pivot point or broke this trend line, and whatever it is. When you're observing the market and it's not doing what you think it should do, well, the market's giving you direct feedback to your hypothesis. So don't fight the marketplace. It's like people say, well, you think sterling yen is going to go up. Yes. But as soon as I make an opinion that sterling yen is going to go up, I realize that I have stepped onto the middle of the train tracks. I am not going to continue walking in the center of the train tracks if the train is coming towards me and it's going to run me over. If I'm wrong, I'm going to step off and get off the thing. There's no problem with that. So keep a trading diary of what you think and why you think it, and then write also what you're observing. Okay, and you know, you can't observe every tick. You know, you say, well, you pick a point, like, you know, my point right now is this 134.45 ish. You know, for me, it should not break this, and I'm talking about not even by like, the max it could break this is less than 7 pips. If this thing breaks this by 7 pips, something's wrong with this pivot. Something's wrong inherently with the idea. Okay, so maybe it only goes down to this level again and then turns. But so what? I mean, the whole objective here is to cut a loss so that you're free to think. If you have to expend mental energy in a trade, you're consuming too much brain processing capacity. You can't think right. So it's best to just get out of something that is causing frustration and confusion, and then take a new look. Even if you get out and then it goes your way, it makes no difference. It's because you have a brand new start to start from. I hope that makes sense. Okay, don't hold on to things that are confusing you. So it brings me to this last point. If you kept diaries, I would, moving forward, keep a diary so you can say this. My best trades, where the big money occurred for me, like, you know, 4 big figures, 5 big figures, 6 big figures, okay, for me were in trades that showed a profit right from the entry. As soon as I entered the thing, it never went against me. It just started moving in my direction. Why? Why did it do that? It's because I'm some type of market genius? No, I'm not. I assure you I'm not. It's because through probing the marketplace, looking around at different pivot points and different price points, I found the perfect psychological time when the force of supply and demand had to carry through. In other words, I caught the marketplace in disequilibrium, and I caught it on the right side. It didn't go up because of me, but you know, the underlying vibration or the underlying force was so strong behind that particular currency that it just had to move. Now, of course, it's not always 4 or 5 big figures. That's wonderful, but you know, sometimes you just catch these moves. Like, for instance, you know, this would not have been a bad move, would not have been a bad trade. Market came back down through 134.10. You buy the break of the trend degree, right? You put your stop below this pivot, you know, like, so it's 90, 97. You put your stop at 90, you know, not 7 pips. And guess what? It ran up, you know, a big figure. Okay, that's not a bad trade. You know, 100 points is not bad. Okay, and how you would validate that was you would go to the left and look to see the other pivot right here, 133.96, and this one was 976, 1 pip away from that low. You know, so that was that's another kind of indication that, hey, you know, we may be moving higher. So that's it for update number 4. I'm hoping you're enjoying these, and I'm going to do like another video because I had some questions about GAN and Elliott wave theory, and you know, I study GAN, and in my opinion he had good ideas about market rotation and some good ideas about measurements of moves, but where he was lacking was nothing was defined. Everything was nebulous. You know, everything was like trying to catch smoke. Elliott wave is another one. You know, there are some practitioners. You know, when I was trading in banks, there were a lot of Elliott wave practitioners, and some apply the theory, you know, successfully, but never consistently. So anyway, we'll talk about that. I mean, I probably don't even have to talk about it. I just basically said what I wanted to say. So anyway, look forward to seeing you guys soon. Cheers.